Hey Central Virginia, are you curious what's going on in our local housing market? In today's housing market update, we're going to cover the doom and gloom headlines that you've been hearing in the market, what's actually happening in our market, and what's predicted for 2025. Let's get into it. What is going on, party peeps? As promised, in this market update video, we're going to be covering the doom and gloom that you're probably hearing about the housing market in the national news media. We're going to cover what's actually happening in our local real estate market, as well as what you can expect for 2025. My name is Chris Elliott. I'm a local real estate agent. Let's jump into it. All right, so first and foremost, we're going to give you three doomy gloomy headlines that you're probably seeing in the news, and we're going to give you the actual factoids that you need to know. So headline number one, consumer debt is at record levels. So this is absolutely true. Consumer debt is comprised, however, though, of mortgage debt, HELOCs or home equity lines of credit, auto loans, credit cards, and those dreaded student loans. So as you can see in the graphic, that is information for the New York Federal Reserve. And the nuance that the news media forgets to share with you is that mortgage debt is the largest component of consumer debt. And you may be thinking, hey Chris, that's still no bueno. This is starting to look a lot like 2008 with this much mortgage debt out there on the street. So before you go start to dig your bunker in your backyard and prepare for dystopia, I would share with you some information from the St. Louis Federal Reserve. And yes, the New York Fed and the St. Louis Fed do communicate, but housing mortgage debt is at an all-time high. What you'll see is that home equity is also at an all-time high as well. And it's actually about 2.5 times rather greater than household mortgage debt. So as a country, we are in a very comfortable debt position when it comes to the housing market. You know, all the others, credit card debt, auto loan debt, student loans, that's a different topic for a different YouTube video. But today we're talking about housing, and I can tell you that the United States as a whole, very safe position as far as equity and mortgage debt. Headline number two, foreclosures are on the rise. Hate to break it to you, this is simply not true. If you look at the graphic, you'll see that foreclosures have actually been on a steady decline in the United States since about mid-2014 and actually dropped in the third quarter of 2024. And then last but not least, mortgage delinquency in the United States is on the rise. Now, this is technically true, but as always, there's a little bit of nuance to it. So as you'll see in the graphic, and this is data from the New York Federal Reserve, serious delinquencies, which are categorized as delinquencies where folks are 90 plus days late on their mortgage payments. There was a slight uptick of that recently. However, that number is still below 1% of all mortgages in the United States and is definitely under the median delinquency rate over the last 21 years. And part of the reason that we're not seeing more foreclosures, even though you can make the argument that the economy as a whole is not in the best place, is that due to the run-up of home values since the Great Recession, and then as the run-up in home values accelerated through COVID, we're finding that a lot of folks are now sitting on a tremendous amount of equity. And even if they fall on hard financial times, they're able to sell that property because they have the equity to sell it if they find themselves in a distressed situation, and they're not necessarily having to just walk away from the property and hand it back to the bank. So now that we've debunked some of the headlines you're probably seeing in the national news media, let's talk about what's actually happening in our local Central Virginia market. Now, I'm going to give you a forewarning that the information I'm about to share with you is probably going to be different than what you've been seeing on the news. The reason being, the news likes to either talk about national housing data, so basically United States as a whole, or they like to select markets that aren't doing particularly well because the news media loves what I affectionately call fear porn, which is basically we want to show you the absolute worst thing that's going on because it keeps you glued to the television and we can sell your attention to these companies that buy advertising space. And I'll give you a little secret. Central Virginia is doing pretty good. So as of November 2024, our year-to-date median sales price in Metro Richmond is $400,000, actually on the nose, which is kind of interesting. This is up 6.7% from where we were this time last year, or year-to-date this time last year. And as much as it feels like there's no inventory on the market, year-to-date we've actually seen an 8.3% increase in the amount of new homes that came to the market or new listings that came to the market. Our days on the market spiked by 42.9%, which is a very dramatic headline that I could share. But in reality, what that means is that our days on the market, basically the time it took from a listing to hit the market to go under contract, jumped from 7 days on the market this time last year to 10 days on the market this past month in the month of November. And our month supply of inventory recently went down to 1.3 months supply of inventory. Month supply of inventory is a real estate nerd term that we use to basically determine whether or not we're in a seller's market or in a buyer's market. 6 months supply of inventory is considered a neutral market. Anything below that is considered a seller's market. So at 1.3 months supply of inventory, we are in a screaming hot seller's market. And then last but not least, the list price to sales price ratio, basically how much of their asking price do sellers ultimately get or sell their properties for, is down from its peak in the May of this year. Boo-hoo. Sellers are currently only getting 100% on median of their asking price in Central Virginia. All right, last but not least, as promised, we're gonna give you 2 predictions for the 2025 housing market. So very important, these are not crisp predictions. I didn't cook these up in my office. These are from smarty pants peoples at very reputable organizations that are full-time economists and have the time, money, energy to study these things all day long. And I'm simply here to report them to you. Prediction number 1, mortgage rates are gonna be coming down in 2025, but unfortunately, they're not gonna be coming down as much as previously predicted earlier this year. And as you can see, the fine folks at Wells Fargo, Fannie Mae, and the Mortgage Bankers Association are collectively predicting that rates will come down, that they will remain in the 6s throughout 2025. Previous predictions had us in the low 6s, even at the high 5s, based on some agencies, by the end of 2025, but unfortunately, they have revised those predictions recently, and looks like we're going to be staying in the 6%. Prediction number 2, home prices will continue to appreciate in 2025. As you can see, 15 of the top 16 forecasters are calling for home price appreciation. The only person, or the only organization rather, calling for home price depreciation is Moody Analytics. And oh, by the way, they're only calling for 0.4% depreciation. So the takeaway there is even the firm that's calling for home price depreciation is calling for very nominal depreciation next year. None of the smarty pants economic folks are calling for a major correction or dystopia or, this huge crash in the real estate market in 2025, despite what your neighbor, who's also a real estate economist, might be telling you when you meet him in the driveway. So the average of all 16 predictors is 3% appreciation for 2025. Given that our market is doing better than most markets in the country, I personally predict that we're going to see anywhere from 5 to 10% appreciation in Metro Richmond in 2025. All right, last but not least, and I appreciate you staying to the end, we're going to give you 3 tips for sellers, would-be sellers, as well as 3 tips for buyers or would-be buyers going into the new year. Number 1, if your home is on the market and it's not selling, I hate to break it to you, but the market is not your problem. As you've already seen from the data I've shared with you, homes are selling, they're selling for great prices, they're selling at very quickly. So if your home's been on the market and it's not selling, it's either you've got the wrong agent marketing the property for you, the price is wrong, or something is off with the condition of your property that needs to be adjusted. But once again, I hate to break it to you, and I empathize, but the market is not your problem if you're not selling. Secondly, spring will be here before you know it. So if you are planning on a home sale for 2025 in the spring, summer, or even in the fall, highly recommend getting in touch with a real estate professional now. If you do not have one, contact me via the information below. Have a conversation with that real estate agent about what your home can realistically sell for, what if anything is recommended to get it ready for market, and start that process now as opposed to waiting until 2 weeks before you want to list, which is what most people do, and most people get really stressed when they want to sell their property. And last but not least, strategy before tactics. So I have conversations all the time with would-be sellers asking if they should paint, if they should do carpet, if they should change countertops. And the conversation I always have with sellers is, hey, we really got to decide on our strategy, and that will inform our tactics. So we got to decide, hey, do we want to try to sell for top dollar? And in that case, yes, we're going to have to do a lot of the things to kind of polish the property up. Or are we more on the other end of the spectrum where we don't want to have to do as much and we're willing to settle for a lower price? That is a decision that you have to make as the homeowner, as the home seller. There is no right or wrong, but once you make that decision, then you can decide what, if anything, you do to the property. For my buyers, get in front of the wave. So we anticipate a lot of buyers re-entering the marketplace, folks that have been sidelining themselves since rates jumped up a couple years ago. We expect to see a much greater buyer demand in 2025. So if you are considering buying a home, I would implore you, if you can find something that works for you and your family, buy a home now before the home price appreciation that we're expected to see next year, as well as the increased competition competition from other buyers that we're expected to see going into next year. Secondly, get pre-qualified now. So if you are considering a home purchase in 2025, I would encourage you to get in touch with a mortgage lender now, find out where you are from a financial standpoint, make a decision as to where you're comfortable. If there's anything you could do to better prepare yourself or get yourself into a better loan product, that's going to be much easier if you give yourself 3, 6, 9 months to kind of get your ducks in a row versus calling that mortgage lender once you've already found the magic property and now you're rushing and you're super stressed. That is not as fun of a process. And then last but not least, homeownership is a long play. So this is something I find myself having to remind our clients that are wanting to time the market or say, hey, what if I buy and home prices go down, even though nobody's expecting home prices to go down? The reality is, if you are buying a home, I would encourage you to plan on staying there for at least 5, if not 10 years. There's not many time periods throughout the history of the United States housing market where if you bought a home and you held it for at least 5, certainly 10 years, where that home wasn't worth more in 5, 10 years than it was when you bought it. So realize when you're getting into the home ownership game, it is a long-term play. And guys, that was it. I hope you found some value in it. If you have any questions, concerns that I did not address, if we can help you with your next home sale or home purchase, contact me via the information below. From my family to yours, I wish you a very happy holiday season and a happy new year.